Investing is about finding value where others don't find it, and that's a quote by David Lee on Investing, a fellow YouTuber. And I think this quote, there's lots of truth to it. And although Dave and we possibly don't agree on Bitcoin and on NEO as an investment, but I want to use this quote as an entry to a video about sharing a little bit more about my personal story of investing, because this is what this channel is all about. How do I find the value, and well, what is my philosophy behind it? And I'll use it with a concrete example right now with my position in Huami, which is possibly, well, maybe I'm finding some value here where others don't find it, or maybe there just isn't any value, because now I just found out that Huami is actually my third largest investment that I've ever taken in terms of money putting in. I have larger positions in my portfolio, but in terms of how much money I have actually put into this company in the very beginning, there is only Tesla and NEO in which I have put more. And now obviously we also had the Q3 earnings, so let's combine this all together and have a look at what it means. If you're new to the channel and you haven't subscribed yet, I would appreciate if you could do so, and also hit that bell button so you get a notification whenever I post a new video. And also, if you find this valuable, please also give an early thumbs up, because this really helps the algorithm and goes a long way. So let's first have a look at this chart of a company. As you can see, this is the time span of 2013 till the mid of 2019. And basically, you could have bought the same company within this very long time period of almost 5 years at the same price, depending on where you find an entry. And you would conclude actually that this company within 5 years time didn't go anywhere, right? And I get this commentary a lot in my comments, for instance, also relating to Huami. Well, why do you pick this company? It doesn't go anywhere. And it seems now that where there are quite a few new investors during, well, this whole crisis, where also private retail investment is taking off, that really like to see those epic runs that we have now in all of the EV stocks, and daily green, so you have those large gains. But this is not really where I'm coming from investing, because for instance, when I covered NEO back in 2019, nobody saw the value in NEO, and the stock was largely going down. Same for when I first entered Tesla in 2013, but also once again in 2018 and 2019, that stock didn't go anywhere during that time as well. But in the end, those companies were actually the reason why I'm now sitting at an overall portfolio gain of more than 10x. And I think this boils actually down to the way that I'm actually approaching companies and investments, because of course, coming back to the stock that I've just showed, this is Tesla, and you see where it has been going. So obviously there has been a 5-year time period where the stock barely did go anywhere. Investors rated Tesla as an automotive company. It went up and down a little bit, but those people who actually saw the big value in Tesla, they were rewarded by holding through. And of course, nowadays lots of people, as investor sentiment has shifted, are chasing the stock. So here I made a chart of how I am personally thinking about investment. Here what I'm trying to do is, first of all, building conviction in a stock. When I find a stock that I think has a high potential in the long run, then first I take a small position and try to figure out whether or not my argument is actually holding true, and if the company is actually moving into the direction that I think that it could go in order to unlock this big potential. Second of all, I try to concentrate on a couple of stocks. So you also see it reflected here on my channel. It's not that I go out every day and make a new video about the latest hydrogen startup or whatever is just going up. Well, because I think, if I'm having my money in too many baskets, that doesn't go anywhere. I like to concentrate into stocks where I think this has huge potential. And this is obviously also the reason why my portfolio is up more than 10x on the entire portfolio level, because I only pick a handful stocks, and for those stocks I try to make sure that over time I put in the right amount of money, because otherwise what does it help me for me if the stock goes up by a lot and I only have like a couple of €100 in that stock? And then the probably hardest part over time is to have the consistency. This means staying true to an investment unless the overall investment hypothesis has changed or is, becoming negative. But, being consistent, that means making purchases over time, but also if it's running up fast, then holding to it and not selling it off all of the time. And this is now basically reflected here in this chart, where I take a small position that might be not ideally timed in the very beginning. So maybe in a spike, and then the share price actually goes down later on. Then I take a second position in order to average my cost a little bit. Well, as you can see, that is not perfectly timed. And then this is where the hard part begins, actually, where I am, buying into some of those lower dips here. And I'm really getting into a mode where I'm, questioning whether or not my investment hypothesis is still valid and it still makes sense to stay in there. But at the same time, this really helps me to build a position over time, because each of those dips that I'm buying here help me to, first of all, increase the position in general to make it larger, and second of all, to average the cost over time to hopefully in the end have a nice average that is a good position when finally the run up continues. And here, for instance, you can see my trades for Tesla stock, which actually exactly reflect that. So, I started in 2013, but these are just my trades starting from 2019, and all of the green dots here are buy purchases. Here the stock has been in a downturn, and I was accumulating more, and then even in the first run up, I was buying more, and then once again buying those dips. Now, the important part here about my Tesla position is that I kept on buying and also not selling all of the time. Instead, of course, I accumulated more. Now, this is kind of the overall context regarding how to structure the portfolio, and also, what it takes over time to achieve those kind of returns. But of course, this could also be a recipe for disaster, because it means that, I am not diversified, so I have more risk. If one of my stocks is going down, then obviously that has a huge drag on my portfolio. And who tells me that I'm actually right about the fact that I'm finding value where others don't find it? So one perfect example to talk about now would be Huami. And you guys know that I'm invested in Huami, ticker symbol HMI, and here you can see once again my trades. So you see the first entry was not ideal, so I bought quite high, around $16 a share actually. Then I bought all of the dips, and then trying to increase my position actually during this recent downtrend. And now obviously after the Q3 earnings, we had again a really large downtrend here. And I mentioned already with my patrons, I made a couple of posts about the preview of the earnings, but also discussing the outcomes of the earnings. And I mentioned that I'm currently not accumulating more, because personally I'm asking myself now, am I missing something here? Maybe I am wrong with my hypothesis that possibly there is value with Huami that others don't see, and that this will show up over time. So let's have a quick recap about Huami. Huami is a wearables manufacturer from China, and they are trying to establish themselves as a healthcare platform. And I like the stock in the beginning because it's growing, so the revenues are growing year over year with up to 30% annual growth. Plus they're generating profits. So this combination between profitable company and on the one hand side, and also a growing company is quite rare. And in addition to that, it's also quite low valued. Also, if we compare it with competitors like Fitbit, Garmin, or Peloton. So Huami is valued with less than $1 billion. And this company value is almost just one-on-one with the actual revenues that they're having in this year. So this is just a 1x revenue multiple here. And this, in my views, is quite low even in the benchmarking with their competitors. So currently what investors are focusing on is actually this red dot here, the Huami company itself, which is producing the wearables, and they have shown a little bit of progress by refreshing the lineup. So they have now new watches, for instance, out there that are looking better than the last generation, that are more premium even. And of course they have also the refreshed Mi Band, which they, for instance, sell through Xiaomi. But for me, this is all things of the past. And I would really like that actually Huami is focusing somewhere else, and also that we can talk about different aspects of Huami here. So what I like at the core of Huami actually is the topic of health data. So Huami is of course collecting data from their biosensors, for instance, heart rate, they're measuring sleep and so on. So in a couple of recent investor reports, they were talking about that they have collected 7 billion nights of sleep, 21 billion hours of heart rate monitoring and so on. And they actually also talked about their registered users. All of this was not a topic anymore in the last earning call and also not in this earning call. And I think this is really disappointing because this is actually what is the important part about Huami in my views. Because how can Huami actually become a healthcare platform or something bigger than just a wearables provider here? Well, first of all, they did a couple of right things. So they acquired a company called Huawei Health, which at the core is an algorithm that kind of uses the health data in order to give users some feedback in how they can improve their health, and they have it actually scientifically manifested by partnering with universities that are actually analyzing it and making large studies with a large range of participants. So it's scientifically valid in that point, in this regard. And the important point here is that the company that they have acquired here is working with insurers, employers, and healthcare providers in order to use this algorithm and the insights that they have on the healthcare data to actually make use cases out of that, and then hopefully at some point actually also generating revenues from that. Also a couple of other opportunities that in my views belong to this Huami ecosystem and have the reason why this is actually more than just a wearables company is the research that they do with universities. So I call it here U to B to X. And in that regard, Huami is the business in the middle here. So the university works with Huami as a business in order to come up with something, insights on, for instance, working with data or coming up with new wearables that are unheard of that can actually be applied with either consumers or businesses, because this is another branch here why I see Huami diving into. So the B2B part here, for instance, they have partnerships with Aspen Imaging and AliveCore, so other companies in the medical, even FDA approved area, but also other hardware providers where they maybe at some point in time help them actually with their expertise in manufacturing hardware, either manufacturing stuff on behalf of them or even find joint business models together and thereby generate new revenues that are actually coming from a B2B revenue stream and not from a B2C, so a consumer revenue stream. So instead of only selling wearables, I think they can actually sell products and services or even R&D to other businesses here. And, with Pi Health actually diving more into those service levels that they can offer also to other businesses here in this regard, but of course also hopefully to the consumers that are consuming and buying their wearables. So lots of untapped business opportunities here, and now I'm trying to value that here as an investor. So what I always try to do with my investment cases here is that I try to model those business napkin cases, and in this case trying to see how large is the market actually that they can tap into and what are the most important key performance indexes or KPIs to watch. So first I use this report by IDC, which they are analyzing the wearable markets and forecasting it. What they're saying is that the market size of the units sold worldwide in 2020 was 396 million, and it will increase to 637 million by 2024. Now this year Huami is about to sell around 50 million units, so that equals a market share of 12.5% here. And in case that they can moderately increase this market share, let's say to up to 15% in the future, they may sell up to 96 million, so close to 100 million units by 2024. Now, the next important thing to watch is the average sales price per unit, because this ultimately defines the revenue that Huami can make. And today they have an average sales price per unit of around $21, which is quite low in the industry. And this is because Huami mostly sells to Xiaomi, like those Mi Bands, and are quite cheap in terms of the sales price. But now, what is the actual interesting part about the recent months of Huami here is that they have launched their own brands like Amazfit and also the Zepp brand, which are more premium. And now you can find, for instance, smartwatches up to 200 or 300 US dollars. So that is now going more into the industry average. So if, for instance, benchmarking with Fitbit, who have average sales prices of 100 US dollars a share. So with those new products, we should expect that actually also the average sales price of Huami products will increase. And I model it here that it will finally reach 28 US dollars. And this is notably my conservative case here. So that would end up in increasing revenues from around 1 billion this year till 2.6 billion until 2024, and that is around about 20 to 30% year-on-year growth. Now, as I mentioned before, the market is currently valuing Huami with a simple price to sale multiple of around 1. So the Huami valuation is currently less than 1 billion actually. But if we continue that forward and maybe, as it matures, giving a 1.2% multiple, that would end up, based on those metrics here, would end up with a valuation of around 3 billion US dollars by 2024. And that would be an increase from today's share price by around almost 300%. So that would be actually already a quite nice gain based on two arguments. Number one is that Huami keeps on selling a similar market share than what they have today. Plus, they can actually increase their pricing a little bit. Now, we could also talk about a little bit more of aggressive valuation here, because, for instance, also Apple in 2016, they were trading at around 1.5 sales multiple. So also valued as a pure wearables, or not even wearables, but hardware manufacturer here. And of course, we all know where the Apple stock went afterwards, and this is largely due to high margins and to other reasons that are not applicable to Huami, but it shows you that also a hardware manufacturer like Apple can actually get out of this old-term view of having those low multiples, and now it's trading at more than 7x of their price to sales. So what would need to happen for Huami here is obviously that they can fulfill their goals on, leveraging some of those new business opportunities here and actually getting recognized as an ecosystem here for both their users, but also their business partners. And if that would be actually fulfilling, then I do think there might be a way of increasing the sales multiple. And let's just make this example again with the same revenue estimations here that I've done before, but now with a 7 multiple of their sales, that would end up to be valued as an $18 billion company by 2024. And that would already mean a nice increase of 2,000%. And actually already with a multiple of 4 of their estimated 2023 sales, that would give them almost a 1,000% increase, so a 10x on the current share price, which is obviously what I'm aiming for. And this is of course why it's highlighted in yellow here. Now I could even spin this case even more aggressive, because this is what I think we're currently not hearing by the management. And this is also why I think the outlook for Q4 was disappointing, and also why, well, they gave us a weak outlook for 2021, but why don't they give us an outlook, for 5 years time, what they're trying to achieve? Because they could well argue here that they actually try and increase the market share from currently 12.5% to 20%. Why not? Huami is positioned to become this mass market producer here with the cheaper inline products than, for instance, Apple Watch, and also comparably priced cheaper than, for instance, Garmin and also even Fitbit. And this kind of statement I was missing from Q3 earnings here, because they mentioned how COVID is impacting the business, and frankly, I'm not buying this argument. Also, the other competitors are obviously impacted by COVID. And of course, Huami can sell online, and no European mall is closed down despite the lockdowns currently. And also in the US, it doesn't seem like people cannot still go out and go shopping. So this argument is kind of weak in my point of view. And this makes me question whether or not there are other problems, for instance, launching their new brands into the Western Western markets, maybe they are struggling with that. And that might be the real reason for the weaker guidance, because actually what they could have pointed out here is that Huami is the winner of this crisis. So they were actually growing 20% of the year-to-date revenue versus 2019, whereas Fitbit is actually declining in revenues versus the last year, and also Garmin is only growing by less than 7%. And also the units shipped for Fitbit are down 20%, whereas instead for Huami they're actually up 17%, which means essentially that Huami is eating into the market share of others here and shipping more units and gaining market depth. And coming back, why this is important is because for me, the wearables, the gross margins on that and so on, and the revenues even from the wearables, they don't matter too much. For me, it's important that Huami can go out there and sell as many of those products as possible in order to increase what is the core of their business, which is the health data that they can leverage with all of this entire ecosystem here, and where they are positioned to be in the lead besides Apple. They are the one who can actually pump out those units and collect the data, and this actually really matters for the valuation here, as you can see. So this is now a really aggressive max case. So what happens if Huami can actually, make more market share here and grow to 20% market share? At the same time, their average sales price grows from $21 only by selling those Xiaomi bands to almost $100, which is more comparable to what Fitbit is, for instance, selling on average. So this would actually bump the revenue to almost $12 billion in 2024. And has actually also a much higher growth rate as a consequence. And then even if we rate it by only as a hardware manufacturer here with those low multiple on the valuation, that would make Huami a 15 billion company by 2024. And that actually means that even between 2023 and 2024, that would be already a 10x investment. Or once again, if they leverage all of those service opportunities and businesses around it, then they could actually even be valued with a higher multiple and even maybe become a $90 billion company at some point in time, which would be a huge gain based on today's terms. Now let's have just a quick look of where this could actually come from. What could they leverage with the data that they're collecting? So one example would be the insurance market. There is actually a 683 billion insurance premium market in China, and that will be growing, to more than $1 trillion. And this is composed of different insurances, of course. So I'm taking here health, accident, and life insurances as the part of where actually Huami could add benefit with all the data that they're collecting, because people can live healthier lives or make better decisions in their life based on that. And actually, this is valuable data for insurance providers, or maybe even Huami could launch their own insurance based on the unique insights that they're gathering from their large crowd. And we've already seen the first examples of these big data topics emerging from Huami. For instance, they can predict COVID cases are spiking just based on the heart rate in countries, and that has been sort of scientifically proven. So this is just a first little bit of a example of how this data can actually be leveraged in the future. Now here back to the case of insurance, that means if we talk about 1.3 billion people in China, a per capita insurance annually of $390, and obviously growing as the population is getting more wealthy as well, and insurance premiums are increasing to $675 per capita based on this report that Ant Financial has been publishing there. So now this is where the Huami unit sales are becoming increasingly important, and not so much the gross margins and the profitability and so on, but it matters how many people are out there actually using that. And this is why it's important that Huami is becoming this mass market provider and actually has a pricing that is accessible to more people than actually using the Apple Watch, for instance. So let's assume Huami has a user base in China of 97 million and can grow it with their sales to more than 215 million by 2024. So based on that, the insurance premium market of those people using that is 37 billion in 2020 and can grow to more than 65 billion by 2024. So now if we would assume a take rate of people, Huami users that are, taking an offering by Huami in their app, for instance, for a new insurance of only 20% of the user base, and then with a brokerage fee that Huami earns on that of 10%, that would end up in around 750 million revenue by 2022. Well, at least in the first year of when they're launching it, based on those user assumptions, and to more than 1.3 billion of revenue in 2024. And these revenues would be really high margin revenues because that's actually just leveraging their existing user base. And obviously, this could go in many different aspects. The insurance is just one example. They could obviously also, just like Peloton or Fitbit, start to have premium subscriptions for data insight, but also for instance, online courses when it comes to workout and fitness. And so this is all of the inherent potential that can actually at some point justify higher sales multiples on Huami's stock that go beyond just a wearable manufacturer. So I'm really starting to wonder now, why is Huami not communicating the relevant numbers here? For instance, market share gained, the registered users, how many units they've been selling in total. They're not telling investors. For instance, there are investors like, Citibank or China Renaissance sitting in there, and there are old school analysts in many ways. They are, filling some Excel sheets with the revenues numbers and the gross margins and so on. And this is where I think retail investors can actually discover the value in this company that is going beyond those Excel sheets and, making sense of where such an ecosystem would go. But obviously we can't complain that they are not coming up with higher price targets or that Wall Street is not jumping onto the bandwagon if, for instance, Huami is not proactively showing what they have in the pipeline regarding this, for instance, in terms of insurances, in terms of services, in terms of even stuff like new categories. They're working on brain-computer interfaces here, which is beyond exciting to learn that this might be, the Neuralink of China in some ways. But, of course, Huami needs to show investors this potential in terms of where this could go in 5 to 10 years' time in order to have investors become more interested in the stock. And the fact that they're not communicating this and not aggressively saying that, well, our target is, to increase the market share and the unit sales and gross margins don't matter so much for now. The fact that they're not doing this is also reflecting back on me, and I'm starting to think to myself like whether or not I'm wrong with seeing what I'm seeing here, whether or not management is actually also going down this road and they are interested in building this actual healthcare ecosystem there, and also coming up with those services and enable those revenue streams. But this is coming back to my investment approach where the problem is always to stay invested during this whole time where the stock is basically not moving, where we have negative news, where things are not going the way they should go. For instance, now with Huami overseas expansion, maybe it is not going the right way. Maybe they have trouble with the gross margins and they may actually be less profitable. Maybe they need to spend more on R&D right now. But of course, over the long time, it only matters whether or not I stay in there and I'm accumulating more shares, that in case that this run-up is actually happening, that I am on board with this, because as I've been outlining with my Napkin cases here, I do see those potentials. I do think the stock could actually go somewhere else. And I actually do think that it's kind of a low risk investment here based on that Huami is just valued so low as of today already. So this is where I'm currently standing at with Huami, my investment in that. It's interesting to see that it has become my third biggest investment. This means to me that I have started building conviction over time, although it's not my largest position in terms of the portfolio, because yes, it hasn't moved that much, but in the end it means that in case that this is at one point taken off, then I think it will be a good investment. And that would actually mean that once again I found some value where others haven't found it. So yeah, I'm interested to know more about your personal views, maybe about Huami. Have you bought their products? Do you like them or not? Do you see similar potential in what I am seeing here? What do you think about healthcare? I know it's not as sexy right now as, for instance, EV stocks, but my personal feeling is just that there is something around healthcare, and similar to what autonomous driving is, a first application case on all of those data connected that hasn't been available before. So I think also similarly in healthcare, we're now entering a time where we see the first application cases coming out that actually make sense, that have been really hard to understand in the very beginning. Of course, I could also be totally wrong and off with this investment here, and this could mean that maybe finally Huami isn't anymore than a cheap Chinese Apple Watch knockoff that isn't going anywhere, with low margins and maybe a mediocre product here. But I think we're going to find out, and I'm beyond excited to announce that we possibly have the opportunity to speak to the head of investor relations of Huami directly, because I actually reached out to Huami Investor Relations, and it seems that the head of IR is actually up for coming onto a call, answering your questions, for instance, about Huami, but also my questions. I post lots of questions during this video already, and I think I'm looking to make this a live stream actually, first off for my Patreon. So if you want to be part of that live stream, please consider to become one of my patrons. So I will publish at what point of time this will take place, and then in the live stream you can obviously also post your questions, or if you cannot be part of the live stream, you can send it to me before, and I'm trying to steer the direction of this talk live, to that these questions are also getting answered. And then after the live stream has been recorded, I will obviously make it public here for others to view on this channel. And then, well, let's see what will be the answers of the management. Maybe it will result for me that I think that they're going down the wrong road, and I may even decide that, well, maybe I made a mistake here and I should actually get out of it. Or maybe I'm getting more convinced that I'm actually seeing the same values here hidden somewhere in this gem called Huami. We're about to find out. And yeah, I hope you enjoyed this. Thank you guys for watching, and see you in the next one.